taken out of the market. Bitcoin will still continue to rise in price as institutional investors wake up and realize that at least 1 to 10% of their assets should be in Bitcoin for many of the reasons that you just mentioned. It's starting to be seen as an inflation hedge, possibly speculative asset. So as family offices, we do sort of need to wake up and understand that this is the future. Right? And I think Bitcoin has been so resilient. We read articles all the time about the death of Bitcoin because this other fantastic asset is coming up or a much better solution, et cetera, et cetera. But I think we've seen that the network effect that Bitcoin has and the nodes that it has attached to it are so strong now that I don't see someone else easily competing. It's like saying, well, this startup is going to destroy Facebook. It's just not going to happen. So I do believe that there should be some allocation to Bitcoin. The right number really depends on the size of the family office, etc. So I would say the minimum is buy one Bitcoin. If you're nervous, just buy one Bitcoin, just to see how it works, so you can monitor it, so you have some skin in the game. Ideally, it should be at least 1% of the entire portfolio. But if you're feeling particularly that you can add these kinds of things to your portfolio, I would say go up to 10%. Especially, as you mentioned, the crypto winter is over. The next 10 years are going to see exponential growth.
Absolutely, absolutely. And I heard someone say recently that you will never find a community that is more passionate about making something work than the community that supports Bitcoin. It's literally millions of people around the world supporting and growing the network and rallying and hoping that the price goes up and the adoption goes up. One of the assets that is particularly important among family offices is real estate. Michael Flight, you are the CEO of a tokenized investment vehicle for real estate. How does blockchain technology streamline investment into real estate, and what are the benefits?
Well, we are super excited. We've been in business since 1990. I am not a technology guy at all. I am a straight real estate guy. But never before are you going to get the options to invest in real estate. So you've got it's the second largest asset class in the world, and who doesn't love real estate? In wealth generation, wealth creation. But with the security token, it's going to open up worldwide liquidity. It's going to open up easier access to larger, more stable commercial real estate funds. So what we're trying to do in the United States is build a single-tenant net lease real estate fund that's comprised of what we like to call bonds wrapped in real estate. So it's super stable, the projects are long-term leases with large corporations, and what we really like about it, combining with the security token, is you can get non-US investors into the United States with relative ease, and then some of the people on the panel here can talk a little bit more about the technology, but we are looking at liquidity potential where you could do peer-to-peer or trading on an exchange or an ATS or some of those things. So that's what we really like about it. It gives superior optionality.
That's awesome. Thank you so much. Roy, my next question is for you. Your firm, the Beijing Group, focuses on crypto trading strategies as well as providing a marketplace for tokenized assets. Aside from real estate, what other assets are poised for tokenization, and what are some of the associated issues?
Sure. Hello? Oh, no. So, it's a good question. I mean, the answer is, as I say, everything digital, and you can essentially tokenize anything. Art is one of the areas that people are very excited about. A lot of people talk about everything from loyalty programs or loyalty tokens, independent things like air miles, etc. But moving into more unique and exotic assets, pretty much anything that is generally illiquid but has a marketplace or has an audience that wants to move and trade it can be made into a security. Like I said, we've seen art, which is a big one. We've seen trading, things like trading cards and collectibles is a massive industry as well that's moving. You talk about the real estate stuff. We've seen illiquid real estate investment trusts that otherwise have a fixed term move into and are essentially liquid for 10, 15 years, get tokenized, and then even beyond that fractionalized, and then those fractions of tokens are able to be traded by people who want to buy 1 cent worth of that stock or that asset. So it's actually pretty amazing when you see what you can do with the digital stuff.
That's awesome, thank you. Can I see a quick show of hands of folks who understand what a tokenized asset is? Okay. Michael Gord, maybe before you answer my question to you, you could take just a few seconds and do an overview of what a tokenized asset is for the newbies in the room. Michael, you are also working on creating a new ecosystem backed by real-world assets. What are some of the potential benefits to creating a unit of account backed by real assets?
Hello? So just for context, a tokenized asset is any arbitrary asset that you put on the blockchain. The blockchain is just a new database to keep it super simple. So if you have a building, if you put that building on the blockchain, now you can make that building transactable through digital assets. So to go back to Tat's question, before I jump in, just to provide some context, so I'm the founder and CEO of a group of blockchain businesses called the Global Digital Asset Group of Companies that are focused across the blockchain and digital asset capital market. Companies including GDA Capital, which is our investment bank, Secure Digital Markets, which is our institutional trading firm, and Global Fund Management, which is our asset management and investment business. By the numbers, we have taken over a dozen digital assets to market with total market capitalizations of several $billion. We have participated and facilitated over $3 billion of digital asset transactions, and we're some of the most active digital asset investors in North America. With regards to the ecosystem that Tatiana mentioned, one of the things that I'm most focused on is putting real-world assets on the blockchain. So everyone here, if you're an investor, you hold assets, like traditional assets like real estate, gold, arts, public equities, fiat currency, and many of those assets are either collecting dust, like gold, sitting in a vault, which is a cost of capital to store, or fiat currency, which is also a cost of capital to store. What the blockchain allows for is new economic models that allow you to, for free, put your assets on the blockchain using our vehicles to make your assets transactable in an existing financial infrastructure that allows you to integrate debit cards, credit cards. You can store your currency for your assets in a bank. You can do collateralized loans. You can invest through venture capital and private equity using your assets, because now your assets have become liquid through tokenization and putting it on the blockchain, making it into a currency. And I'm particularly excited about this value proposition because in the current economic climate, with countries around the world printing trillions of dollars of assets, it's reasonable to assume that if we continue to print trillions of dollars of assets, that the value of fiat currency is going to be inflated, or going to continue to be inflated, I should say. I believe that most of the world is not going to desire to hold their wealth in a wildly fluctuating asset like Bitcoins, though I might, or at least a percentage of my wealth, but I believe that the majority of the world is going to want to hold their wealth or hold any assets they have in a currency that is supported by real world assets like real estate, gold, art, public equities, that they would expect to appreciate based on long-term value of these assets, rather than fiat currency, which is going to, I expect, continue to be inflated. By the numbers, we have participated in putting over $20 billion of assets on the blockchain. This is not a new idea. It also costs nothing and is purely upside for participants. So I'm happy to talk about how you could put your assets on the blockchain after this.
That's awesome. Thank you so much, Michael. My next question is for Yael Tamar. You work with SolidBlock, a platform offering insurance and trading services for digital securities backed by real-world assets. What has been the institutional response to the digitization of assets?
So this is a very interesting question, Tatiana. I think most of the institutional interest has been behind the scenes. And right now, the most interesting thing that's happening in the space, I believe, is that American institutions are getting ready to participate in tokenization on a wide scale. And the reason being is not necessarily liquidity for these organizations, right? Large institutions don't necessarily have the need for liquidity. However, they have millions of clients behind the institution, and they have interest in the flexibility, immutability, and transparency that tokenization provides, and of course, liquidity. So these institutions, I believe, are going to be the drive behind the adoption of tokenization, right? We have a lot of supply, as Michael mentioned. We have, only this group put together a few $1 billion worth of assets on the blockchain. Imagine, globally, we have now a lot of assets in the blockchain, but who's really buying these assets? Now, one last thing that I want to mention is that, on the one hand, Michael said that we want to bring real estate to everybody, right? And who's everybody? These are individual investors, the high net worth individuals all over the world. How are they going to reach these assets? How are they going to find out about these opportunities, right? So I believe that it's our responsibility, if this is our vision, to bring real estate to everybody, to make it, a play of individual investors in addition to the institutions. So to conclude, it's basically the response has been really positive. Institutions are getting ready to prepare their infrastructure for their investors to come in and invest in individual assets rather than baskets of assets as well, and to facilitate a lot of flexibility.
Thank you so much, Yael. Mohammed, you work with Brox Equity, which is using digital securities to improve the oil and gas system. Could you explain how blockchain technology integrates into your industry and what the potential of security tokens for natural resource-rich countries is?
Thank you, Tatiana. Brox Equity was established a few years ago, maybe 2 years ago, and we went on this venture to invest in natural resources across North America. The vision was to create a private equity vehicle, just a traditional alternative investment vehicle, allowing regional access to oil and gas, privately held oil and gas companies across the US and Canada. But during that time, my knowledge of blockchain was just becoming more familiar, and it resonated that because of my 7-8 years of corporate finance, traditional growth equity advisory, I realized the power of blockchain to be able to streamline transparently, more efficiently, capital raising processes. And what a security token, or in other words, a digital security it is merely a representation of shares of a company, or a representation of ownership of a certain asset. And instead of Brox Equity having to go through the administrative burden of issuing physical paper share certificates to its hundreds of shareholders around the world, it simply issues a digital security on, for example, the Ethereum blockchain as a smart contract that has coded restrictions within it to comply with exempt securities laws in the jurisdiction where that offering is being made. So it is very easy to confuse digital securities with cryptocurrencies, and it's very easy to become confused when trying to learn about digital securities, especially for regulators, because there's a thin line between what is exempt and what is not, and there's a thin line between regulation and exemption, right? To a requirement to be registered and a requirement to not be registered as a financial offering or a financial services provider. And it is understanding that corporate finance regulation and that background that helped me to be able to issue a digital security under available prospectus exemptions and to be still friends with the regulators in Canada. So it is simply, and having such a digital security on a dedicated platform where investors can simply sign in like they would sign into their bank account or any investment account with an investment company, and that is run by a registered broker-dealer or financial institution, allows investors to efficiently track their investment, monitor that digital security's performance, and by no means could any digital security offerer guarantee liquidity, because there is no such thing as liquidity in the security token or digital securities market today unless we make that liquidity happen. You still have to make a market. Even for any IPO that goes on a publicly listed exchange, you have to make a market for it. There are so many small cap companies in Canada that have absolutely no liquidity. So it is not about liquidity, it's about efficiency, it's about eliminating the administrative burdens, it's about reducing the high barriers to entry into privately held exploration and production companies. And personally, I chose natural resources because I have a thing for oil and gas. And as a Canadian, we have access to an abundance of natural gas, which we are investing in, using that wasted resource to transform it into energy or power on site, and using that electricity to power Bitcoin mining data centers. So now you have a digital security that is backed by real-world commodities with Bitcoin mining integrated into that business model, allowing for investors to receive automated dividends in the form of Bitcoin, allowing that exposure to take place. Now we have an alternative investment in digital security that is income generating and no need for liquidity.
Awesome, thank you so much, Mohammed. So our industry is almost 12 years old since the birth of Bitcoin and then the rest of the digital assets. I think a lot of the audience here, as family offices in particular, has a multi-generational view. They look to invest in terms of 10, 50, even 100 years. This is a question for everyone. If you were to make a prediction 10 years from now, what will the world of digital assets look like?
You can pick it up.
Yeah.
You go, girl. So we believe that all of right now the world of assets, is huge. Just real estate is $300 trillion, right, worth of assets. Only 1% of those assets is tradable today, right? These are public REITs, usually, right? So imagine the possibility we just bring another 1% to be tradable. So we believe that in real estate, in investable real estate, what we see right now, all these wonderful family offices that have real estate assets, we're going to see the majority of those assets as liquid and tradable. Now the world is ready. The only thing that's missing, in my opinion, is global liquidity, is ability to raise money globally. That's something that we are building through SolidBlock, through our network of global distributors, which include both blockchain exchanges and traditional exchanges. And we're building an interoperability layer for all those exchanges to be able to interoperate. A buyer in the US wants an asset in Dubai, and a buyer in Dubai wants an asset in Israel, right? That should be happening much more easily than the way it's happening today with titles and management and overhead and all these administrative costs. Imagine this could happen in just 1 second. So that's our belief in real estate, and then the rest of the assets I believe will follow.
I think to build on that, it's going to happen fast. In 10 years, I think the entire financial economy is going to look different. We're seeing companies like PayPal come to market with opening up digital asset transactions to tens of millions of users overnight. Where I predict the world is going to be in 10 years is no more paper money, no more plastic cards. Your wallet is digital on your phone or perhaps in a chip in 10 years. Everything that you interact with online and in person, you will be rewarded with loyalty tokens. Those loyalty tokens will be interoperable for everything. So you participating in a survey will provide you with an asset that you can use to invest into into a fractionalized arts piece that can then be sold for real estate. So yeah, I predict that in 10 years, all assets, everything of value will be on chain. The same as how with the internet, we could have been talking in 1990 about how in 10 years, all information of value will be on the internet.
So, I think actually one of the important things to note is there's a lot of noise in the industry right now, and I think that when you're looking from the outside into the industry, you tend to be, we'll say, consumed by hundreds of different cryptocurrencies and a lot of different opportunities with regards to security tokens and tokenized assets and all those fun things. So if you sort of look 10 years out into the future and you want to understand the marketplace, I think the way that we see it at least is that you'll start seeing a sunsetting of the various different cryptocurrencies. Because at the end of the day, what is the difference between all the different cryptocurrencies out there? For the most part, they're speculative, they're technologies that fundamentally do the same thing, that are speculatively driven assets in the marketplace. And at the end of the day, the majority of them, pretty much almost all of them, don't have very much utility beyond the speculation of the actual cryptocurrency asset. And so what you'll start seeing is marketplaces turning around and saying, look, we're not interested in technologies that add no utility to the market whatsoever. And what you're going to start seeing is the rise of one key, as it usually happens, one category king that will start rising up that has the capacity to deliver the utility that the marketplace needs to be able to grow and scale, and that base asset will end up being a value store as a cryptocurrency, and it will also be the base for tokenized assets and securities, and pretty much all utility and data storage on the blockchain. So as you see that starting to happen, you'll start seeing the derivatives markets move off of and out of their traditional marketplaces and into the digital asset marketplaces. And when derivatives that are built on top of tokenized real-world assets and tokenized securities benefit from some of the different features and functionality that digital assets provide, you're going to start to see a very different type of marketplace that will actually allow for what we call modern finance, a global marketplace that really allows transactions to happen in near real time and help with macroeconomics, microeconomics, and inflation, a whole bunch of other different things. So there's a lot of really interesting things that we think can happen, but there's this logical progression as education really comes over the general audience and understanding.
Thank you.
Can I just add to that? So a year ago, I was actually on the same panel, and the key message I had for the industry was basically grow up. And in that year, I've gone from being pitched, putting your teacup on blockchain, all these sort of pointless applications that make zero sense. I've seen that sort of mature just over the last year into, this is our product, this is what we do, and this is the technology we use, and that happens to be blockchain or what have you. Doesn't matter. So I think in the next 10 years, what's going to be really important is to understand that these are tools, right? That you can use to build companies, that you can use to build new products, interesting products. The second thing I want to say is, everyone here said it, but I want to really emphasize it. When we had the whole ICO craze like 2-3 years ago, my key takeaway from that was that there's billions and billions and billions of dollars that want to invest in things that they just literally can't. And they had no other option, right? So going to the next level and getting the proper legislation in place, getting proper security token assets or proper securitization of these assets, I think you're going to see so much capital freed up from countries that you can't even imagine, that are just desperate to invest into anything that will get them a good return, especially in these low interest rate environments. And to me, that's the most exciting thing that's going to be happening over the next 10 years, which is going to inflate the value of your digital assets like you can't believe. I think I told you on our last panel that this is our 1996 moment. 100%. I think in the next 10 years, you'll feel so foolish if you didn't even consider a digital asset.
Absolutely, and I think there's
Just to add to that, because it opened the segue into something, and we are literally undergoing in the midst of a financial revolution, literally. And within the next 10 years, and it's already taking place, you'll see a redistribution of wealth from the previous generation to a new generation and to an unbanked society that is now capable of becoming banked, and to fractional ownership, where you can own a fraction of a real estate, or a fraction of a commodity, or a fraction of any asset in a form of a digital format that is easily transferable. And the internet was, as yesterday Bitcoin SB's CEO mentioned, it was created as a communication protocol. The internet was never created with the intention as a transaction protocol. So just as SMTP is a protocol for email, blockchain is a protocol for making transactions take place instantly, just as fast as we can text message on WhatsApp. So this is where it's going. Big tech companies like Facebook, they want to go out with Libra and issue their own cryptocurrencies. But this has been taking place since the beginning of time, because companies like Canadian Tire have had their own money since they started. And there is Canadian Tire money, and it's just like tokens that you can use to buy a company's product. And this is what most of these ICOs were issuing, tokens that you can use on those tech companies' platforms that didn't even exist in most cases.
Yeah, if I can just follow up with that, the thing that I saw a few years back is in piggybacking on what everybody else is saying, is that in the last 30 years, billions of people came out of poverty and have now moved into the middle class. And those people are going to get the opportunity, whether you're in the middle of Africa, whether you're in South America, whether you're in Kansas, United States, whether you're in Bahrain, to just invest in what you want to invest in from your phone. And so that's what I'm looking at. And then the other thing is, if you own these physical assets right now and what you're invested in right now, all that extra liquidity and money coming into the market is just going to increase the value of what you're holding currently.
Absolutely. Thank you so much, Michael. Unfortunately, that's all the time that we have for today. If you would like to chat with any of our panelists, please find them afterwards, and I'm sure they'll be happy to answer any of the questions you may have. Thanks so much, guys.